Today on the major averages, trying to hold on to those post-election gains, at least today. Of course, they've been up so much. My next guest says U.S. stocks seem to be the only game in town right now. Joining me now, BTIG's Jonathan Krinsky. Welcome back. Does that mean that this rally just continues almost unabated from here until, I don't know, at least election day? Inauguration day, excuse me?
Hey, Scott. So, look, the primary trend for U.S. equities remains constructive, and I do think the year probably finishes higher than we are here. The question is the path to get there. And there's three really points that suggest maybe some tactical vulnerability here in the near term. The first is, we're seeing some upside exhaustion signs. Last Wednesday, for instance, we had 27% of the S&P 500 make a 52-week high. And this may be a bit counterintuitive because new highs are, while they're bullish in the medium term, the last 10 times we've seen a surge like that, 8 of 10 times has been lower 30 days later. So that suggests into December a little bit of weakness. The second point is really the kind of speculative frenzy we've seen post-election. You've seen surge in crypto, in the meme stocks. You had the most amount of NASDAQ OTC volume last week since July. So there's a lot of indication of a bit of speculative frenzy out there that typically coincides with some tactical froth. And then the third point are the global markets. Now, while the S&P is up about 3.5% since election day, the all-world ex-US index is down around 3%. Now, that's pretty much in line, actually, with what we saw during the 2016 election. So if we're looking for the 2016 redo, this is about the time when you want to see global markets start to participate. That's what happened then. You had about a 3% pullback post-election, and then they actually started participating in the upside with U.S. stocks. So we think, the next few days into the next 2 weeks will be telling, is the weakness in global markets, just kind of that knee-jerk reaction to the strengthening dollar we've seen over the last couple weeks, or is it telling us something a bit more ominous?
It would appear, I think you could make an argument that it would be the former, that the likelihood's the former over the latter. I think global markets would obviously be responding to what would be a new Trump administration. The fact that, as you said, the dollar has been rallying. You have the prospect of tariffs and other approaches to geopolitical issues that may be far different than prior. But that's neither here nor there. The other idea I want you to opine on is maybe what was considered speculative in the past, like crypto, feels like it has a little more certainty, or maybe the most amount of certainty, quote unquote, as much as you can have in those types of assets than it has ever had, because you're going to have an administration that's obviously much more open-armed to it.
Yeah, I think Bitcoin for sure. The breakout through 70,000 was compelling. That measured to around 90,000, which we've hit that. So I don't think Bitcoin itself is that speculative. But when you talk about some of the meme coins, Dogecoin, for instance, recently had a market cap exceeding Ford. That's a little more. Well,
believe me, I'm specifically referencing Bitcoin. I'm glad you mentioned that, because I'm not suggesting that these other coins or whatever necessarily have nearly the upside prospects as a way that people around this administration have talked about Bitcoin. So let's talk about Bitcoin. Forget the others.
Yeah. So again, Bitcoin, nothing wrong with that. But again, the acceleration in the move, from 70,000 to 90,000 is it's been an impressive move for sure. So I think just a little bit of a pause is warranted there. But back to the global markets. Again, while the direction has been similar to 2016, the main difference in some of the global markets now versus 2016 is some of their structural patterns. You look at South Korea, for instance, and a big part of that is Samsung for sure, but that market, is probing multi-year lows. It's really, been unable to recover after the August volatility. France, look at the CAC. That's, also, testing multi-year uptrend line. So the structural aspect of some of these global markets is a bit weaker than it was in 2016. Again, we don't want to make too much of it yet because, you did have a period of several weeks post that election where global markets needed to find their footing. But again, if they can't, find their footing in the next week or two, then you have to ask yourself, is it more of a canary as opposed to just some rotational aspects post the election?
Maybe. I mean, what looks most technically vulnerable to you between, some of the sectors that have really ripped since election, like financials, industrials. We highlighted earlier today on halftime, software, cyber, cloud, et cetera. I mean, is there one that jumps out where you say, okay, this looks a little technically stretched or vulnerable?
So there's two aspects here. There's the parts of the market that have surged that are probably due for a pause consolidation. I would put financials in there. Software actually we've liked relative to semis. That trade's worked out well. I think the other side of the coin, though, and certainly software now could be vulnerable to a bit of profit taking. But look at the relative performance of semis. And you mentioned we have NVIDIA coming up next week, so that'll be telling. But semis have really not shown any relative strength since the election. And if you look at the semis overlaid with South Korea, those charts have been very correlated over the last 2 years. And so you have to ask yourself again, is South Korea kind of leading the semis to the downside? We'll see. But I think those are some areas we're certainly watching here.
All right, Jonathan, I got to bounce. We'll talk to you soon. Jonathan Krinsky, BTIG, because I've